The stock market has retraced significantly from its highs back in November and December of 2021, and I have Fibonacci retracement levels placed on these stock charts in TradingView right here, and you can see that the S&P 500, which is on the screen right now, retraced back to that 23.6% line almost perfectly, and I'm using the lows for my Fibonacci retracement of March of 2020 and the highs of December of 2021, and it retraced almost perfectly. I mean, look at this line right here. We cut through it 3 times, but you can see we've really gravitated towards that 23% range and then bounced straight up. And looking at the small caps, the Russell 2000 ETF, I used the same time frame. My low for my Fibonacci retracement is the stock market lows of March of 2020, and the high is from November of 2021 because small caps peaked their all-time high a little bit before the large caps. You can see the large caps, the S&P 500 peaked right around the end of December, the beginning of January, while small caps peaked just before that, which is actually kind of telling, as we've heard time and time again that small caps tend to lead the stock market, and in this case it did perfectly. It peaked out in November right before the large caps did. Anyway, small caps have retraced on the Fibonacci retracement perfectly. I was saying that the S&P 500 retraced almost perfectly to that 23% range. You can see we cut through it a couple of times and then bounced and started heading up. The small caps, the Russell 2000, retraced to the 38% range, so it had a much larger drawback, right? 38% of the run-up it has retraced, but it nailed that 38% retracement level perfectly twice, right? You can see on, was it 28 January, nailed it, and then right here as well on 24 February, nailed it. So we have kind of a double bottom there, and it is bouncing back up. So what does this mean for the stock market? When we use Fibonacci retracement levels, what are we doing here? Well, we think that the theory is that it is going to find a bottom at one of these levels. So when we look at, you know, the Russell 2000 being a leader of the stock market, right? Small caps tend to lead the large caps in a direction, whether that be up or down, right? Back in November, it peaked and it started heading down, and then the large caps peaked shortly after and then started heading down. Well, we see the small caps have created a double bottom smack on the 38% Fibonacci retracement level, which suggests that is the bottom. It's obviously no guarantee, but that's a pretty strong indicator. First of all, it's a double bottom, which is a good technical indicator for a bottom. Double bottom meaning there are 2 distinct points in a very similar or exact same range, right? And then it reverses from there, in this case to the upside. But not only is it double bottom, but it has double bottomed exactly on that 38% retracement level, which also suggests that this is the floor and we're going to head up from there. Now, it's not always the case, as you can see back here in late December, as the Russell 2000 was dropping, we hit a bottom right here on 20 December on this 23% retracement level, and we bounced right back up, which was a very nice bounce. But unfortunately, that was not the bottom, as we kind of peaked here on 3 January and continued to head down. So it's not always a guarantee that these levels are going to be the floor, but it's a pretty good indicator when you see a nice bounce off, right? So that's what I got for the Russell 2000. It looks really good that the small caps are going to be heading in the right direction to the upside and pulling the large caps with it. On the large caps, I've been following this kind of channel, this downward trend for a little while now. And then when I put the Fibonacci retracement levels on here, it kind of really amplified what I've been looking at when I noticed that, hey, not only did it break out of this channel, it also bounced off of this 23% Fibonacci retracement level area. So these are two things that I've been watching: this breakout from this downward channel, and also just this bounce off of this 23% Fibonacci retracement level. So things are looking good, in my opinion, for large caps and small caps, and especially because we're finally starting to see the small caps find their bottom and start to head back up. That is very important. We've seen a lot of uncertainty and just the small caps kind of being beaten up over, I mean, it's been like a year now, right? We've seen this kind of just trend sideways and then head down for over a year now, whereas the large caps have had much more of an upward trajectory until they finally peaked in January. So we really need the small caps to start to head up again. That's really going to pull that stock market, the whole stock market, in that direction. And it looks like it has finally found its bottom right here, considering this double bottom, right? A point right there and a point right there, also being on the Fibonacci retracement level of 38%, which is a very strong level. This is one of the most common levels for a retracement or a pullback in the stock market to hit. So I want to know what you guys think about Fibonacci retracement levels in the comments below. Do you think I'm onto something here? Is this something that you look at? Do you want to see me make a video on how to do this in TradingView? Or do you want to see more analysis like this on individual stocks? Let me know. But the bottom line for this video I wanted to show you guys is that the overall stock market, not any individual stock per se, but the overall stock market looks like it's in a good spot to start heading up again based on this bounce off of this Fibonacci level. So let me know what you guys think about that analysis. Is there more things that I should be looking at? Of course, there's geopolitical issues, with Russia, Ukraine, and inflation, and the Fed, and things like that. There's a lot of things that go in here, but just based purely on the technicals, this area looks really good for a bounce and a head back up to the upside. So let me know what you guys think about that. And I hope everyone out there is doing well, and I hope we're making some money here very soon. All right, I'll see you in the next video, guys. Bye.